Welcome everyone. My name is Mike Hamilton. Welcome to everybody on YouTube streaming and in the room here. Got a very simple presentation to go through, not only 3 or 4 slides. I'm going to show you what I've been trading today and why I've been trading it and how I've been trading it. And I'm going to talk about how to be a brilliant day trader. So make yourselves comfortable. By all means, type in any questions you got as we go along. If I don't answer them straight away, I will come back to them. If you would prefer to ask a question in the room and stick your mic on, that's fine. Let me know, send me a message and I'll unmute you. In the meantime, let's just get going. So a really good trading day today, and I'll explain why it was good. Let's answer this question. How can you be a brilliant day trader? Well, I've been trading for a very long time. I've been trading since the mid-80s in terms of investment. I've been day trading since about 2005, 2006. So I've been there, done that, got the badge. I mean, to be a brilliant day trader, you need to have the commitment and put the work in. Now, I'm not saying it's not hard graft, it's not thousands of hours, but you do have to put the work in, and you need a level of discipline that can only come from having a system. But so let's just flick through the slides and let me talk about specifics. So to be a brilliant day trader, you've got to have a method, money management. You don't need a big account, but you do need really good grasp, a complete understanding of money management, and you need the preparation, the mindset and the preparation before you go into the market, before the market's open. So I'm going to talk about these 3 things in detail, not a massive amount of detail, but I'm going to break them down one by one. So let's get something straight before we carry on. These markets are random. They are not scientific. They are not specific. Now, this is something that some people never get their heads around. That's why they come into trading. They learn a system, they learn somebody else's system, but never quite make it work for themselves. And that's because these markets are random, but there are certain ways that you can avoid the problems that a random market can give you. And I'll try and explain that best I can in a relatively short period of time. But the point is, they can be measured. That's the crucial point. You can, although they are random and they are not point for point specific, they can be measured. And it's about, once you've got your head around that, once you've grasped that and accepted that, then that's a big step towards trading, particularly towards becoming a successful day trader. Okay, so to break this down, the method, the money, the mind. The method is you've got to understand risk. If you have a losing trade, just back off. Now, one of my most successful mentorees, one of the reasons why I think he was so successful, made so much money, as he's still making very good money, is that he's really good at just, if he's not sure about the market, or maybe he's had a losing trade, he will stop trading. And not everybody does that, which is why so many people lose money, because they don't have the ability, they don't have the self-discipline to do that. And he is one of the few people that, and he was doing that right from the start. Normally I have to teach people and wrap them over the knuckles. This particular chap, he's my most recent mentoree. He was very good at doing that. And moving on, it's about watching the market. The temptation, particularly in the early days of your trading, is to watch your account. you need to stay absolutely focused on the market and not watching your account. What I mean is, if you enter a trade and it starts to go against you, you should be in a situation where you don't feel you need to watch your account. You don't feel you need to look at how much your account's down. If you find yourself doing that, you're probably trading too big a position size. You should be in a position where you are just completely focused on the trade, completely focused on what the market's doing, and not on your account. Back test. So the whole point is, you've got to have a method, you've got to have a system, and you've got to have a system that gives you the confidence to take every single trade. Every time a trade presents itself, you need to take it, because you need to stop becoming a discretionary trader, and you need to take a trade every time your system tells you to take a trade. That is fundamental to being a brilliant day trader, absolutely fundamental. Because the best trades often don't feel right. Every time I take a trade, it doesn't feel right, because at the point in which I am taking a trade, if it's trending, if it's a bullish trend, you need to take a pullback. And so the point in which you enter that trade is when the market looks its worst. So it's counterintuitive. The whole point is, trading is counterintuitive. You know, and only when you learn, only when you really grasp that and accept that the market's around, and accept that it's not intuitive to take a trade when the market is dipping, once you get your head around that, then you become a successful trader. Now, it says here, expect to win at least 65 to 70% of your trades. That does not have to be that high a success rate. There are a lot of successful traders out there who have less than 50% success rates. But I feel you need to aim, and you need to have a 65 to 70% success rate. Otherwise, what you're doing is probably not working, and you're taking too many risks. So the whole point about having a method is you do exactly the same thing every day and expect the same results. If you do not know what you should be doing, then you don't have a strategy. When these markets open, you need to be completely prepared for what you want to see happen in the marketplace. And if it doesn't do that, I mean, if I do not see a market respecting a certain support level or a resistance level, and it's possibly it's very erratic, it's more volatile than normal, all these kinds of things, then it's probably a good day not to trade. More than likely a day not to trade. Not every day is a good day to trade. One hot tip is when the markets open on Monday, a lot of the time they're resetting themselves and adjusting to what's happened on the previous week, particularly the last trading day of the previous week. And we'll talk about that in a minute. I'll show you what I mean by that in a minute. Okay, so these are the kinds of things that you need to really grasp to be a successful day trader. A lot of people who try and day trade get buried. They bury their head. They're totally focused on very small time frames. I just think you cannot. I personally do not think you can trade in 1 and 2 minute charts. You can certainly not prepare in a 1 and 2 minute chart unless you've got a very, very specific system that allows you to do that, and you've got a success rate that proves that you can do it. And by proving it to yourself, the best way to prove it to yourself is to keep a journal. These are the kinds of boring admin things that so many traders don't do. They just fire off lots of trades, 2, 3, 4 or more trades a day, and wonder why their account's not improving. Today, I've only taken 2 trades. I bought the lows in gold and I bought the lows in the S&Ps. That's all I've done today, nothing else. And I'll show you the result of that in a minute. Okay. So let's go on. So you've got to have a system. Otherwise, the money will take the market will take your money away. So let's talk about the system. Let's come out of these charts. And let's talk about the system. First of all, just to prove that I do trade these markets. So this is my entry in the S&Ps today. I bought this support level here, £20 a point. I'm over 400 up at the moment on this particular trade today. My exit is up there at the moment, but I'm looking just to take this into the back end of the day and see if we can get at least possibly over the 4,000 mark and towards that 4,001. It may not do it. I'll just take the market one step at a time and see if that's possible. So that's the trade today. These are the calls in the trading room. Just let's enlarge that. So you can see today that I have at 12.44, I was buying the gold at 18.08. My stop was under 18.03 and a half, and my target is 18.49. About 2.5 hours later, it's moving, but here we are. Then at 3:30 UK time, I start talking about how the 4-hour charts are holding up on the S&Ps and the Dow and the Nasdaq, and then at 3:30, I'm buying the Dow lows. So these are all the alerts in today's trading room. So let's have a look at where we are right now. Let's have a look at the technicals of this. Let's call the charts up. Yeah, so on the left, you've got a 10-minute chart of the S&Ps, and on the right, you have a daily chart. So this is what I mean about looking at the bigger picture, making sure you're not trapped in 1 and 2 minute charts with all the noise that you get in those small time frames. So the kind of preparation I would normally do on a chart like this is to look at the open period. So as a 10-minute chart, that's the first 10 minutes in the S&Ps today. Now, a couple of things to note. Let's start off with the daily chart on the right. The daily chart on the right is, we've had this lovely move from, this is the 22-23 time barrier as we ticked into 23. So towards the end of last year, so end of December into January, we had this really nice push up, and then we spent 2-3 days pulling back into the main breakout area. Then we did a couple of waves to the upside, and now we've had a 1, 2, 3 wave correction. So the reason why I've been buying these dips now is because after a 1, 2, 3, 4, 5 and a 1, 2, 3 wave move, these markets are potentially reset themselves. There's a 5 and 3 wave Elliott move, and this is potentially the start of another 5 and 3 wave move. So you've got a European session that pushed up off the lows. The Dow opens, it pushes back into the London support, and then at the open you get a push up. It pulls back about 60 minutes or so, or 90 minutes after the open, and then you get a 1, 2, 3-way move out of the gate. So there's the European move, there's the US support, and here we are already coming back into the post-European open resistance. Okay, so this is not a particularly big move. This is only a 30, 40, it's only a 30 pip move in the S&Ps. If you look at the Dow, so the Dow is sitting on this support down here from December. So the Dow is still pinned down to this December late 2022 support at the moment. The open range for the Dow is right back here. That's the open range for the Dow. So at the moment, this Dow is struggling compared with the S&Ps. How many pips am I looking for? On the S&Ps, I generally look for about 50. If Dow, I mean, an average day on the Dow is between 150 and 250 pips. The volatility in the Dow and the daily range of the Dow is way superior to the S&Ps. So you can see when we came out of the open range of the Dow, we popped back in. So we spend very little time outside of this open range. What we now need to do is hold the 800 mark and then see if we can come up to the highs and then pop back up to the London resistance area. Okay, for this Dow to achieve a bullish close today, we've got to close above this 33,000. So we're basically grappling with the 33,700 or 800 mark, 32,700 or 800. So, I mean, if this closes lower and closes underneath the open range, then stop buying. But my system basically, so I normally trade the Dow, but I've only traded the S&Ps today because we already had a higher close on the S&P off of this move here. I've not touched the Dow, which is unusual. I normally do concentrate on the Dow. But if you are above the open range and the open lows are holding, then my system says buy. So I was buying right at these. I bought 39.74 on just under the midway of this open range. And I am still holding, looking to see if this can break through 4,000 mark. So obviously 4,000, markets love big numbers. It may not break through that 4,000 today, but if we can keep hold up, then I will stay in that. But any market that holds the open range and subsequently tests it here, at 4:35 o'clock UK time, if any market that holds that, I would hold into the close. That's a rule of my system. So if the open range holds and the pullback to the open range is tested and holds, then I would hold this trade into the close and expect this to potentially push through 4,000. So we look as if we may have the potential to come back to this 4,100 plus. Look at the gold trade. So here is let's mark off the gold. So here's the European open of the gold down there. So in London this morning, we saw 1804. get bought. We saw a push into 1812, 1813. We pulled back there as the data came out at 130. This is the data bar here at 130. So that's the data range. If I take this other range off, that's the data range. And that's your benchmark. That's why I suggest you don't go into the data period with a trade on. You wait and see what the market reaction is to the data, and then trade the direction of that data. So back to the daily chart, we already had a higher close on the Monday, held up on the Monday. We held the European support. Data came out, we pushed up above the London Open, and we are still moving even now. So if you miss this trade, I think we will pull back tomorrow. I wouldn't at all, but I'd be surprised if we don't see 1815, 1820 again. We're 1830 at the moment. But if we can sustain this, if we get a pullback tomorrow and the pullback holds, maybe we can finish the week above 1850. Okay, so to sum up, it's about having a system, preparing yourself, being fully prepared before the market's opened, know what you want out of the markets, do the same thing every day and expect the same results. Keep a journal. If the markets do not meet your expectations and they do not behave in a way that you expected, back off, particularly if you had a stop out. One other thing to look at here is volume. You see, there's not a lot of, I've not got moving averages and all sorts of things over these charts. But look how we saw a decent level of data in the London period, but far more data when we came to the US data and the New York Open, far more volume. So that's your confirmation. If you go up and the volume's decreasing and doesn't make these kinds of highs, and you don't see that sort of scale of volume, that's normally a very, very good indicator to back off and stay out of these markets. All right. So very quickly, let's just go through a couple of other things. Let's just talk about, so I'm making the case here for you having a system. And so this is the system that I teach. It's based on 1, 2, 3, 4, 5 strategies. Based on 5 strategies, it is we have an anchor chart system, which we teach. So that's what, if you come into the program, the next one is the coming Saturday. You come into the program, that's what we teach, those strategies, the anchor chart system. The program then includes live trading for 4 weeks in the live trading room, and you've seen some of the alerts that I put in the trading room. And then you get, once the Zoom trading room is closed, then we have an alert room and a chat room. And then you've got all the video backups and some charts in the chat room as well. So the next one, if you're interested, then click on, I'll give you the link for this. If you're interested, click on this book the full program here. So further up the page, you've got a little introduction there. There's the booking page. Let's put this one in the room now. This is the booking page. So I'm running the program on Saturday. That's the booking page. 575 gets you the whole program, the check sheets, the journals, templated trade plan, and of course all the time with me in the live room and the alert room. All right, so a great day. Let's have a look. I think I might be trading the Dow. Yeah, if this Dow picks up off this, we do look as if we're holding this support now. If we can break out of that and hold that price above the 745 open range, then I think this is viable to at least 850, 900. It's a very strong support level there from the back end of December. So I'd be surprised if we don't end the day higher. But yeah, I do not know where these markets are going to finish. That's the whole point, yeah, because these markets are random. Okay, any final questions? Any final questions from YouTube? Let's have a look. Nope, that's fine. Brilliant. Right, if you want to join me on Saturday, let me know. If you've got any questions about the program, drop me a line from the website, tradingeasyway.com. You can see the chat button on the website. Brilliant. I'm just going to go away and manage these trades, and I'm also hungry and going to have my meal soon. So thank you very much for joining me, and I will be running specific short courses in the coming weeks as well, so look out for those. But as we leave this Dow, it is certainly, the volume is picking up on these dips. So it looks as if the Dow could push through this 32,800 and may do well into the close. Brilliant. Thanks for joining me, and I will speak to you very soon.